Matthew Bell here, and today I just wanted to talk a little bit about determining need and about identifying your own need. In another video, I go through calculating need, and I'm thinking of this as a little bit of a different topic. In the video on calculating need, I talk about different approaches to how to actually compute mathematically, essentially, what your insurance need might be. And there's a lot of different approaches to it. You can count up all your debts. There's different multiples of income, different strategies. I'm not going to repeat that here. I have a different video for that. But what I'm thinking of today is just the idea of whether or not you're going to recognize whether you have an insurance need or not. And the best example that I can think of here is going to be the example of going to your doctor. I'm not trying to place, necessarily your insurance-related needs on the same level as health concerns. But on the other hand, there are both financial, physical, and other kinds of dangers that can be relevant in a person's life. And so in a similar way to how a doctor has the expertise required to survey your situation, to evaluate you, give you an examination, and to try and identify what problems there might be, even if they're hidden, there's a sense in which your financial advisors are going to be those people who are going to help do that for you in a financial context. So I want to say that the answer to the question, can you identify your own insurance needs, is going to be sometimes. Sometimes you can. So for example, again, using the example of the doctor, there are going to be instances where I am going to injure myself. I sprained my wrist and my ankle at the beginning of the summer. And I won't get into how I did that because it was somewhat embarrassing. But at the same time, I was in pain. I couldn't move my arm. Obviously, I have a medical need at that point. If somebody starts to develop pains in a particular area of their body, or they get headaches, or they are noticing things coming out of them that shouldn't, or that didn't come out of them previously, then we're talking about some things that make it obvious that you might have a health concern. But the scary part is, what are the things that you might not notice? And this is supposed to be the reason for going periodically for a health checkup, for a wellness visit, and so on. Because during those visits, your doctor will run certain tests and do other kinds of basic examinations that might indicate that there's a problem that you were unaware of. So I know not every wellness visit has that level of focus. In some cases, a person's doctor will take a series of tests and monitor certain levels of various different, and I'm not a doctor here, so I'm groping mightily for anything that's going to make sense, but cholesterol and blood pressure and platelet count and God knows what. And if I'm mistaken, understand I'm not medically trained. But the point that I'm making is that it is the doctor at the end of the day who's going to be the final word on whether or not you have any medical needs. If those needs are so obvious, you don't need a doctor to identify them, then obviously you can identify those yourself without any kind of medical training whatsoever. But it's the things that the doctor needs training for. It's the test results that might indicate a problem even though you don't have any pain, even though you don't have headaches, and there's no obvious sign that there's something the matter. And there can be a lot of really serious health problems that are virtually silent in the sense of any kinds of indicators that they're present. Well, this is in a way relevant to insurance and financial needs, because there can be, of course, instances in which a person's financial needs become obvious. Anybody who listens to Dave Ramsey's show realizes that there are dozens and dozens of people who have quite obvious and glaring financial problems, and most of those, in the case of Dave Ramsey's callers, have to do with people who are drowning in debt. And so they'll call and they'll say, I'm $100,000 in debt. I owe whatever, $250,000 on my mortgage, and yakety yak down the line, right? So those kinds of problems certainly exist. Or when a person dies and they don't have coverage, and this exposes to somebody that it might be good to have that kind of final expense plan built into their own life, or in my case, my dad's long-term care and ultimate death, looking at the impact that that made on my mom and on my family. Those kinds of things are glaring and they're obvious. But the kinds of things that a well-trained financial professional, well-trained insurance agent, well-trained advisor, well-trained tax preparer might be able to find in your portfolio, in your financial plan, there are things like this that may not be so obvious, and yet, just like in the medical case, they can be silent killers. They can derail your long-term care plans. They can derail your retirement plans. They can cause it to be the case that you don't have money when you need it, when you pass, no money left for the family. I've seen universal life policies set up that haven't been funded correctly, that didn't pan out according to the projections that were given when the policy was taken out, and the policies are just a few years from lapsing, and many people don't realize that that's happening to them. I've seen, as I'm sure many of you have, friends and relatives pass and they had no insurance and have to resort to GoFundMe pages. But sometimes it's not just related to final expense. Sometimes it's just loading their portfolio in one way, whether it's too much risk in terms of market. Maybe it's not enough risk. My mom had for years and years been allocating money in her 403B in such a fixed set of investments that her return was barely able to cover the fees of maintaining her account. And it's grown very pitifully. And so there's a sense in which a person can be too conservative with too much of their money, too risky with too much of their money. There can be tax exposure problems in a person's portfolio. There's all kinds of things, and I wouldn't presume in this video to be able to tell you the kinds of things that you might be up against. But what I would say is that just the same way that you would be motivated to go to the doctor, and no one likes it, I don't like it, to go to the doctor. You are obviously motivated to go to the doctor when you're not feeling good, but if you're motivated to try to keep a finger on the pulse of your health, pun or no pun, then you might go to the doctor even if you feel fine, just for a checkup. And that's what I think I would tell you in the case of your financial health. If your retirement plans matter to you, if you want to make sure that your loved ones are not left with a bill upon your passing, if you think you might see some benefit in getting a financial wellness check, then I would say schedule an appointment with somebody who is knowledgeable about your situation. In another video, I talk about what I refer to as the four-legged stool of retirement planning. In that, I make the point that retirement planning is something like a four-legged stool, where you're going to have a lawyer, you're going to have a tax preparer, you're going to have an investment person, and you're going to have a life insurance person all advising you, ideally, because of the different perspectives. And I won't repeat myself here, but what I would say is that think about a wellness check with each of these professionals on a yearly or something close to that basis, just to make sure that nothing is slipping through the cracks. The financial planning that you do is kind of like aiming at a moving target, given the fact that there are things that change with respect to tax laws and the way trusts are treated, things that change with respect to the interest rate environment, things that change from how the market is returning from a bull market to a bear market and vice versa. There is a constantly shifting landscape. And part of the reason to keep yourself in a conversation with these advisors is because they ideally are trained in order to recognize how the changes in the environment are going to impact your personal situation and your personal plan. So I don't want to harp. This was brought to my attention recently, and it's something I've thought about for a while, and I just thought I would share a few thoughts on it with you. Again, this is for general, as I say in every video, this is for general informational and entertainment purposes only. From my point of view, I cannot advise you. I can't fulfill that role. I can just say that it's worth keeping your finger on the pulse of your plans and to check out how any changes might affect that. And ultimately, at the end of the day, I would just say, do you have enough confidence in your plans to get them checked out? And if you don't, then you need to get them checked out. And if you do, then you should still get them checked out. So again, This is Matthew Bell. I thank you so much. If something I said today was of importance or of any value to you, I would invite you please to like the video, subscribe to the channel. I have other videos, a couple of them I mentioned in this particular one as well, and I just would invite you to check those out and look forward to seeing you again sometime soon.